Hello everyone, welcome to Smart Investing. My name is Albert and today's video is going to be about the banking sector. So these are the next 5 stocks that I have. Before I begin, I just want to say that today is Sunday, February 25th, 2024. Just so you guys know the exact date and telling you guys that, nothing's late and everything's real time. So first stock up that I have here is AGM Dash A. The Dash A is basically a different class, but basically the stock has different at the end of the ticker symbol it might be different, but the symbol in itself, the first 3 letters are usually the same. So anyhow, Federal Agriculture is the name of it. So we're going to be going over fundamentals, technicals, all that. And again, we're only going over 5 stocks. I was going to go over 3 stocks, but then I thought I was going to be done, but then another 2 lists came up that I didn't even know about. So sooner or later I will be done. And I just can't wait to get this over with, really. So here we are with ticker symbol AGM-A. So market cap is at 1.59. Volume is at 425. That's like horrible. There's like no volume on that. They earn pretty good at 15.4. And then you have a 4.4 dividend, which is pretty nice. 52-week high and low. A difference of at least $10, definitely. So, that's a difference of. I'm trying to see a difference of. So that's at least $60. A difference of $60. And then the PE ratio here is at about 10. Want to round it off, 9.5. Slightly undervalued, so it is at a good value. But again, nobody's really buying this stock or selling it. Like I said, it looks very inactive, very, very inactive just by the volume. Let's see how they did in the last 5 years. So in 2020, obviously, I like to go off of that because everything was pretty much insanely overpriced ever since 2020. And then I just want to see the percentage in gains or in dollar amounts, really. So they went from 2020, they went from a low of about $40 all the way to, they reached the top of about 113 in 2022. And then that lasted a few months. Then they went back down. So they were in this range here for a good, almost a good year. Almost a good year. About a year for 2022. And then 2023, that's when they broke out to new highs. And then they dropped down again. And now they broke to new highs. So from this point on, it looks like they're in an uptrend. I mean, like I said, you had like flat. And then all of a sudden, they kind of broke out from here. And that's all she wrote. So, who can tell what can happen from here? But anyhow, moving on from that, looking at the 1 year. So to break even or go past the low, it has to break new lows is what I'm saying. It has to go under 120. That will be my take on it. And again, the price is at 146, so that's a long ways to go. 3 month, it looks pretty solid. The 1 month looks like it's downtrending. The 5-day looks pretty normal. And we're just going to move on from that one. So now let's look at the analysis. Quant ratings. So we have here, income is pretty good. I don't know why they rated that number so low. They rated this a 5.67. Disagree with that. The momentum, I highly disagree with that as well. Quality is always a question mark to me. I'd like to see reviews or any comments or statements or anything that can be of actual proof or evidence as to why the company is so valuable and so good, actually. Because value doesn't mean valuable. I mean, if you're a first time stock picker, but value is basically by price. Are you getting this company at a good price? Basically, are you entering at a good time to buy it cheap? So again, that's what they mean by value. So for value, yes, slightly undervalued. So with that number, I don't know. I can't give you a number. It's hard to calculate a number, but I would say slightly undervalued. Growth, they have a 6.81. I don't really see banks growing. That's not really a sector that I can consider to say that it's gonna take off soon. I just don't see it happening entirely. They rated this quant as a 4 out of 5. I don't see that happening as well. Moving on to fundamentals, when I look at the general accounting practices, not the non general guidelines. So it looks like they've been outperforming. I don't have anything for Q3. I have nothing for Q3 here, just Q1 and Q2. It looks like they insanely beat it by mega margins here from Q1. And they reported those earnings results. Let's see here if they have anything. Nothing. ROA wasn't even 1%, even the previous years as well. It slightly went up from previous years, but again, it's really low for return on assets. Then we have return on equity, which is about the same as previous years, so nothing new. Everything was pretty flat to me. Earnings have grown in 2022. I'd like to see 2023 because we're already at the end of February. So maybe one more month to have other companies report, the results. But other than that, it's doing better. But again, it's not a company that people would like to. I'm having issues. Hold on. Okay, there it is. So net margins we have here 2022. I don't have results again for it's not giving me results for 2023. I wish it did because again in the March I would think and I would hope that a lot of companies already reported their earnings, and that will conclude definitely by the end of March. Like 99% of companies already just reported everything. So I can't wait to see the 2023 annual results for all these key indicators. Now again, net margins, we have about 25%. That's a drop from 2021. Again, 2022 results. Then we have, it did better than 2020 comparing to 2022, but it's starting to go pretty even and flatline like it was from 2018 and 19. So again, out of curiosity, just to see the 2023 results. Typical debt in the 90s. Mid 90s is kind of pushing it, but again, basically all in debt almost. I mean, only 5% off, really, from 100. This is like 4% away from 100, 5%. Well, really 4 and change. Then you have 5. It's insane. It's like they're fully loaded on debt. Not good. But again, a lot of banks do that. Net income has risen in 2022. Total revenue gained more than 2020 and 2021, and a slight gain from 2019. And trying to see. So this one's the lowest, and then this one's the highest. So then these three aren't too far away from each other. I mean, they're pretty much in line, I would say, nothing drastic. But yeah, this is definitely a drastic move from year to year. Balance sheet again, 95%. We already saw that. Now looking at some cash flow, we have 809 for the operating. Already 3 billion. So we're looking at about what did I say? 809. 809. So 2.2. About 2.2. So that's about right to break even in cash flow. They broke even in cash flow. So the net income just barely supports the cash flow. They have just enough money. So they're pretty much breaking even on debt. Well, not debt, sorry, on cash flow. And it's hard to say if they can afford the dividend. I mean, it says they're earning 15 times. And they're paying out 4. So from by the looks of it, it looks like they can afford it. But it's just that debt. The debt really ruins it. So you have a big raise here. So you go from 95 cents to $1.10. That's, let me see, 15-cent raise. So that's pretty good, actually. Pretty good. And I'm talking about for each quarter. So 15 cents times 4, we're looking at about 60 cents. So that's not bad, actually. That really is not bad. So again, this company, I thought it was in the banking sector, but it's not. So it's in the corporate financial services. Let's move on to the next one. SBNY, Signature Bank. This is 20 earnings. I thought this company went under. Signature Bank of New York. Let me see something. This company's still trading? Are you serious? Yeah, that was the one in yeah, so that's what I thought. It's really, is it trading? Let me see something. Let me read the notes. I thought this was, I didn't think this company was still trading. Wow. I did not think this company was still trading. So again, looks like it is. Maybe under a new name or something. I wouldn't trust this company. So this company is only at $2 right now. Earnings are pretty high at 20. That's unbelievable to see for a market cap of 126 million. So these numbers are all bogus, really. At 20 times earnings for a company, any company of any market cap, yeah, that doesn't match with the share price at all. So these numbers are like weird. I don't know if it's the app or if they are true, they're wrong. Just like they're off. Just doesn't even look. Doesn't even look right. So again, you had this big drop in 2023. And that was all she wrote. That was the big fiasco. Ever since it's flatlined since April, even all the way till now. So this stock is not going to be moving much. Not much to say about this company. Awful. Fundamentals, I don't even, just for the kicks, I guess, just to look at it. They're still profitable. That's what I don't get. How is this company still profitable? It's not even showing me estimates or results. Nothing for 2023. So that wouldn't make sense. That's weird. How can a company not report earnings, but then they're still able to trade? This company has to be over the market or some kind of private market. It just doesn't look right. So anyways, again, stay away from this company. If you think you want to trade it, don't even try. This bank is done. It's not even worth it. Even by looking at the numbers, it's just they're just weird. It looks so weird. How can they grow so much so fast? Like you went from. I want to see the debt levels real quick. What are the debt levels here? It's not showing me. It's a little slow or laggy something. So anyways. Oh, so 92%. It's pretty normal. Cash flow. Let's look at that real quick from 2022. So 945. 16 billion in investing. Unbelievable. Yeah, these guys did not know what they were doing. So in cash flow, they were negative 24, at least negative 24 billion. Are you kidding me? For 2022, negative 24 billion. That the numbers don't lie. Okay, negative 23. That's awful. So again, awful stock. No and no. Next one up, ticker symbol CIZN, Citizens Holding. 1 year chart looks awful. Volume is awful. I mean, right away, I just claim don't even bother with the stock. Just on the volume, the market cap, the high and the low, barely $10 difference. Almost made the minimum requirement. It needs to be a little bit more than $7, not just or close enough to it. I'd rather it be a difference of closer to 11 instead of 10. Earnings are just like a third percent. Then you have dividends. How they paying more dividends than earnings? Beats me. And then it's showing that the PE is rating at a 23. Yeah, I don't think so. And then with that ugly looking chart, yeah, I don't think so. We have these numbers for income, which is the highest one. So really, really low numbers. The overall rating they have is 1 out of 5. Excuse me. So then they have 5.5 for income. I can't agree or disagree. Just because I need to look more into this stock. So last 5 years, so we went from they went from around $16, and ever since the start of 2022, it's just been downhill, and that's all she wrote. They're stepping down, and yeah, this stock is not gonna come alive. Again, no volume, no market cap. Sooner or later, the stock is, I want to say delisted. Well, it is already delisted. It's over the counter, but I don't know if it might do worse than what it is. That's what I'm actually trying to get at. So that was ticker symbol CIZN. I don't think I should even go over the fundamentals. It's not even showing me full results. ROA, it's not showing me anything. Pretty slow. Something's going on. So again, 96% cash flow. Let's look at that. So for the cash flow in 2022, we're looking at about, let me see here. So 75, negative 75. So about 50 million, negative 50 million in cash flow. That is pretty bad. Hold up. Is that 2022? Okay. So 2022 net income was 9.62. Even if you used all the net income, you're still down like 40. Wow. I'd hate to be $40 million in debt if I ran this company or a company of this size or whatever. That's not looking good. They shouldn't even pay dividends, to be honest. I don't know why they continue to pay out. It's the worst decision. Yes, they made a cut from 24 cents to 16. So that was in March going into June for 2023, but they should cut it off entirely. It's just not worth it. This stock is doing bad, but you know, as people who run this company, I mean, do the best you can. I just don't see that. They're not even trying. They just they still want to pay out because obviously they're paying themselves, so they don't want to save the company or the name or the reputation again. Uh, it's always that greed that matters. That's what it is. So moving on to the next one again. That stock was horrible as well. So 3 bad stocks already. Next one up is ticker symbol UNB, Union Bank shares. Another one with low volume and low market cap. Earnings per share 2.5. Dividends is at 1.4. 52-week high and low. A difference of about $12. Decent. Met that requirement. So PE ratio is at 12, slightly undervalued. So then we have a neutral price range of about $30 with a low of about 20. So I mean, if it does break out, I don't see this going above $37. Not for this year. Again, very low volume. A lot of people are not even into this stock, so yeah, we're just gonna say that it's very inactive and people don't like it, and that's just the way it is. Moving on to the analysis for quants. Overall rating 2 out of 5. Momentum, they gave it a 7.78. That was the highest rating for this stock. I have to disagree with that number since that was the highest factor in its rating. The lowest factor was growth. I can see that happening. As far as the other numbers, not too sure. And then we just want to glance at the indicators here, see what's going on. ROA is at 1%, 18% ROE. That's not bad for ROE, actually. It's pretty good. 2022, 2.79. The earnings, net margins, 26%, 95%. We're going to go into the income. So we have 12.62 million. Then we have 48 million for the revenue. So that's like 25% profit margins, if I'm not mistaken, right? Yeah, a little bit above that, 26. So really high in balance, pretty normal. So we 96% debt. So we have cash flow for operating is 29, 207. So I can't even do the math. So let's see, 30. That was 30. And 150 is 180. So 27 million, negative 27 million. They're down. So can they make up for that with the net income? No, they can't. So 27 minus 12, that would be like 15. So they're down negative 15 million. Wow. I just don't understand how, and what makes a company still unprofitable for so long and they're still on the market. I don't get it. I don't get it. So anyhow, for this stock, another one with cash flow issues, and then The volume is inactive. Last one up is BOTJ, Bank of James Financial Group. We have here a volume of 3,000, market cap at 52, 52-week high and low with a difference of $5. I mean, it's horrible. Earnings at about 2, a payout of about 0.4. So that ratio is about 25%. Payout ratio, it's not bad. So then we have PE is at 6. It's just horrible. These numbers are horrible. I'm sorry. They just... Like, the less the market cap, yes, the harder it is. But if you continue to have good financial habits, it's going to pay off in the long run. But yeah, to have this company, I mean, a volume and the market cap, and then they're still paying out. So you had a high of about $14. It has not broken since about 2020, since the year 2020. So moving on from that to, let's look at some analysis for quants. We have a rating of 3 out of 5. Highest rating for the quant is momentum. I disagree with that. I don't see that happening. Lowest rating was growth. I don't agree with it at all. We can read about it real quick. So they're a commercial and retail bank. When I look at the general accounting practices, we have return on assets, not even a 1%. Not bad an ROE. Earnings per share, 1.9, same as 2022. Net margins, look about the same as 2022. They lowered the debt only by like 1%, still the same. Almost looks as much as 2022, very similar. Moving on to net income, same as 2022. Only a difference of like 0.2 million. I mean, revenue, same as 2022. Same. Cash flow, let's see what we have here. We have 9 million in operating. Wow. Yeah, this ain't good. Wow, so 120. So 130 million in negative cash flow. So 120. Yeah, what about 120 in negative? Negative 120 million in cash flow. That's horrible. And then if they use their net income for the negative 120, they still are down at least 100. Negative 100 in cash flow. Horrible. Mismanaged company. Very, very horrible. That's all I have for you guys. Sorry I didn't go so much over the charts. But again, pretty standard. You know, in 2020 they dropped. Then in July they went up and then stood flat for a few months, then went down. Then it started to curl up again. I can't say if it's a bullish signal. But again, once they reach new highs, then that might be a signal. But it just doesn't look like that is doing the job as of right now. So that's it. That's the ticker symbol, BOTJ, Bank of the James. All 5 companies were bad. So again, there you have it. There you have it. Those are your 5. Thank you guys for watching. I'll see you guys in the next one.